Friends, in this video we'll see GST amendments applicable for May 26 exam. Let's see the amendments one by one. The first is relating to the time of supply under section 12.4 and 13.4 of the CGST Act. These two sections has been deleted by the government. What is these two sections? They are relating to the time of supply in case of voucher. You may be remember there are two types of voucher. One is identifiable voucher and another is non-identifiable voucher. What is identifiable voucher? It means by using that voucher, you can purchase only the particular type of goods or service. And time of supply in case of identifiable voucher is the date of issue of voucher. Okay, in case of unidentifiable voucher, what is the meaning of unidentifiable voucher? It means you can use that voucher for purchase of any goods or service. In that case, the time of supply is at the redemption of the voucher. These two sections, section 12.4 and section 13.4 has been deleted by the government. Why they are deleted? Because if it is prepaid instrument, RBI approved prepaid instrument, then it will be treated as money. And money is out of GST. If you see the definition of goods given in the GST law, what it says, it includes all kinds of movable property except money and security. So money is outside the GST. So when it is RBI approved prepaid instrument, that is voucher, then it is outside the GST. If it is not RBI approved prepaid instrument, then it is covered by Schedule 3 of the CGST Act, which is neither supply of goods nor supply of services. Actionable claim other than specified actionable claim. So in both the situation, suppose it is RBI approved prepaid instrument, that is voucher, it is money, no levy, no GST levy. If it is not RBI approved prepaid instrument, then it is covered by Schedule 3 of the CGST Act, which is neither supply of goods nor supply of services. So in both the situations, there is no GST levy. So there is no question of time of supply. Therefore, these two sections has been deleted by the government. Okay, have you understood? This was the first amendment. Now let's see the next amendment. Amendments relating to the, now there is an amendment relating to the exemption in case of life insurance and health insurance. What is the present situation? That if you are taking any life insurance or health insurance, GST at the rate of 18% is payable. Correct? Correct. Now there is an amendment, and what is that amendment? Entry number 36C and entry number 36D has been inserted as an exemption entry by way of a notification 16/2025. What it says that if the individual has taken any life insurance or health insurance for himself or herself and his or her family, then that is fully exempt. This is a welcome step, welcome amendment. However, this is not applicable for the group. So what is the amendment? Suppose there is an individual, he takes the insurance of life insurance or health insurance for himself or his family, then the GST is fully exempt. No need to pay the GST. Okay. However, this exemption is not applicable to the group. Now the question is, what is group? Let's take an example that there is a company, there are 200 employees in a company, and the company takes the health insurance of all its employees. Then the 200 employees is a group. The exemption benefit of section of entry number 36C or entry number 36D is not available. GST at the rate of 18% is payable in such case. Because these 200 employees who comes together is a group. They come together to form for the purpose of common economic benefit. That is not a family. So this exemption is not applicable to there. Further, there may be trade association, Chamber of Commerce, that is a group, that is not a family. So the exemption benefit is not available. Have you understood? Let's take an example that Mr. A, an individual, purchased a health insurance policy from XYZ insurance company for himself and his family. Spouse, son, family means family, given family as considered family by the insurance company. Generally, it is parents, dependent parents, spouse, children, daughter, son, etc. And paid a total premium of 1,50,000. So his payment does not have any GST element. This is fully exempt. As per the notification number 16/2025, entry number 36D, health insurance by the individual himself or his family are exempt from the payment of GST. Accordingly, in the above case, XYZ Limited should not collect any GST from A Limited. Okay, have you understood? Have you understood what is group? The benefit is not available to the group. Benefit is available only for the individual. Life insurance, health insurance taken by the individual or his family. It is fully exempt. This is a welcome amendment. Let's see the next amendment relating to the input tax credit. You may remember Safari Retreats case. What it is? And according to section 17(5), the GST ITC credit is not available for construction of immovable property other than plant or machinery. The word used was plant or machinery. In Safari case, what has happened? That they constructed a building for the purpose of mall, for offices to be given on a rent, shops, offices. And how this is interpreted by the Supreme Court, that the word used in section 17(5) is plant or machinery. So when a building is constructed for the purpose of business, then it covers under the definition of plant. So any input that is required like steel, cement, bricks, input services like civil engineer, architect services, all that the ITC credit was available as per Safari case. However, lawmakers were surprised by looking at this case because that is not an intention. The GST credit is available only if something is fixed to the earth, which is plant and machinery. However, in this case, even the building is constructed for the purpose of business, the credit was available. So government has made the amendment, and that is a retrospective amendment from 1st July 2017. And what is that amendment? Is that they substituted the word plant or machinery with plant and machinery. So when the word used is plant and machinery, so even if the building is constructed for the purpose of business, the ITC is not available. Okay, so by amendment, by substituting the word plant and machinery from 1st July 2017, this case of Safari Retreats is overdue. It's over. It's no more the ITC credit is available even if that building is constructed for the purpose of business. Okay. Now let's see the GST amendments relating to the local goods transport. Before that, you may remember that there is a change in the GST rates. Earlier, the rates were 5%, 12%, 18%, 28%. The new rates are 5%, 12% has been removed, 18% continued, 28% GST rate has been removed, and a new rate of 40% has been introduced. on certain luxury and demerits item. Okay, so you may be having a question that whether you need to remember these rates. There is no need to remember these rates because in an exam, these rates will be given in a given case studies. Suppose you are having any study material which is having a GST rate at the rate of 12%. You need to read with at the rate of 18%. Okay. But important for the GST exam is the concept, not these remembering these rates. Now you may be having a question that why we are discussing these rates. We are discussing these rates because there is one change relating to the GTA service. You may be remember that what is a GTA service? Means a person who is transporting the goods by road by issuing a consignment note. Remember, there are two options available: 5% RCM, reverse charge mechanism without input tax credit, 12% with input tax credit under forward charge. Now this 12% rate has been removed. So the GTA service provider who is availing the input tax credit and paying the tax at the under forward charge, the GST at the rate of 18% is payable and not at the rate of 12%. Okay. Okay. Now let's see the amendments relating to the local goods transport. You may remember that there is a section 9(5) in the CGST Act. What is this section? There is a service provider, there is a service recipient, and there is a ECO, like electronic commerce operator, aggregator. So there are two types. There are two categories we can say, not types, categories. The first category is passenger transportation, like Ola, Uber, and restaurant service. Correct? So in this case, irrespective of whether the service provider is registered under GST or not, ECO, that is the aggregator, electronic commerce operator, will pay the full tax. And then another category is accommodation service. Correct? Accommodation service by the hotel. Then there is a service like urban clap. What is the difference between first category and second category? If the recipient, if the service provider is registered under GST, then ECO will not pay the tax. The service provider will pay the tax. ECO will pay the full tax in this second category only if the service provider is unregistered. They made the amendment to the section 9(5) and they included in this second category local goods transporter. What it means that if the local goods transporter is unregistered and providing a service through aggregator, that is electronic commerce operator, then electronic commerce operator need to pay the full tax at the rate of 18%. If local goods transporter is registered under GST, then ECO will not pay the tax, but a local goods transporter will pay the full tax at the rate of 18%. Friends, this is the first amendment. These are the important amendments relating to the local goods transport. Expect a question in your exam on this. Have you understood the first amendment? If the local goods transporter is unregistered and providing a service through ECO, full GST is payable at the rate of 18%. If the local goods transporter is registered under GST, then ECO will not pay the tax, but the local goods transporter will pay the tax at the rate of 18%. Have you understood? Okay. Now come to the next. You may be remember that there is a entry number 18 to the notification 12/2017 exemption notification. What is that entry? Is the transportation of goods by road other than GTA service provider and courier. Okay. Now what is the local goods transporter? See, local goods transporter is also transporting the goods by road. transporting the goods by road. They are not issuing any consignment note. So ideally this exemption notification number 18 is available for the local goods transporter also. Local goods transporter means what? Like I'm Dunzo, I'm taking a name just for the example, that if you forgot something at home, for example, digital signature is mistakenly kept at home and you are in the office. So you ask that Dunzo to collect a digital signature from my home and give it to me. That is a local goods transporter. Now, what is the amendment? Government has specifically mentioned that this exemption notification, this exemption entry is not applicable for local goods transporter. So even if local goods transporter is transporting the goods by road and not issuing a consignment note, still the benefit of entry number 18 of notification 2017 is not available. They are required to pay the full tax at the rate of 18%. Have you understood this amendment? No exemption benefit. Okay. Now let's see the next amendment, that the local goods transporter will not be treated as GTA. Suppose a local goods transporter transporting the goods issues the consignment note, then ideally it's a GTA, correct? But through this amendment, government has specifically mentioned that local goods transporter will not be treated as GTA. What is the implication of this amendment? The implication of this amendment is that the benefit of payment of tax at the rate of 5% under RCM, reverse charge mechanism, is not available to the local goods transporter. So if the local goods transporter transporting the goods and issues the consignment note, he will not be treated as GTA service, whether he himself provided the service or through electronic commerce operator. Then they will not be treated as GTA service, and the benefit of 5% RCM will not be available. They need to pay the tax at the rate of 18% under forward charge mechanism. Have you understood this amendment? Okay. Now this is a summary that what we discussed. Suppose there is a ECO and unregistered supplier, that is service provider, then ECO is liable to pay the tax at the rate of 18%. Suppose there is a ECO and that service provider is registered, then the service provider, that is supplier, is liable to pay the tax at the rate of 18%. Okay, this is just a summary. Now see this example for the purpose of making our understanding clear. Let's see one example. A Dunzo is ECO, electronic commerce operator, provide local delivery of services within the city and delivers 20,000 orders during the year. Just as an example, for the purpose of understanding. Collect rupees 50 per delivery, assume. So what is his collection? Is 10 lakh. Delivery is made by road on two-wheeler and no consignment notes were issued. Very good. Dunzo and ECO claim exemption of delivery charges treating the service of transportation of goods by road. So the exemption under 18 exemption entry 18 is available. That is his contention. And he is also not a GTA service provider or a courier agency. Examine the correctness of the claim of Dunzo. Answer. Entry number 18 of notification number 2017 has been amended in FY25, where specifically mentioned that exemption of entry number 18 of notification 12/2017 does not include local goods transport. Therefore, Dunzo is liable to pay GST at the rate of 18% on the full value, and the exemption benefit of entry number 18 of the notification 12/2017 is not available. What is mentioned by Dunzo is incorrect. Okay. Have you understood? Now we will see the last part of amendments applicable for May 26 exam relating to discount. In GST, there are two types of discount. One is pre-supply discount and post-supply discount. We often used to say that if it is pre-supply discount, then it is allowed as deduction from the transaction value. And post-supply discount is not allowed as deduction from the transaction value. But what is this pre-supply, post-supply discount? If I say that a discount which is given before supply is a pre-supply discount, is it correct? If I say a post-supply discount means a discount given after supply, is it accurate? Is it so simple? What is accurate is that when that discount is agreed or announced. A discount which is agreed or announced before supply is a pre-supply discount. You may actually pass on that discount after supply. It is still a pre-supply discount that is allowed as deduction from the transaction value. Let's take an example that A supplied a material to B and it has been agreed before supply that if B pays within 30 days from the date of invoice, then A will give 2% discount. Let's assume this is an example. Then whether A will be able to show this discount in the invoice? No, he wouldn't. He cannot. Now suppose B paid to A within 30 days from the date of invoice. Then it is still a pre-supply discount. A is entitled to pass on that discount to B by way of a credit note with GST. Because the invoice is already raised. So it can be passed on only by way of a credit note. That is with GST. What are its implications? That this credit note, a proportionate GST liability of A will be reduced, provided there is a basic condition that B needs to reverse the proportionate input tax credit because he has availed the input tax credit on the original invoice with a full amount. This is a basic condition. So in case of pre-supply discount, what are the conditions? That it has to be agreed before supply. It is to be related to a particular supply. It can be A's GST liability, supplier's GST liability is allowed to be reduced only if buyer reverse the proportionate input tax credit because government cannot be out of money. So instead of all these conditions, and there is a litigation with the department, one more way available is to issue a financial or a commercial credit note. Because how it matters? In case of B2B transaction, GST is plus minus game for the business and the plus minus game for the government. And none of the monkey will get anything. Money is not having any color. A charged GST on the original invoice on B. He collected the amount and paid to the government. B availed the input tax credit, which he will be used in his further supply. Therefore, it is better to issue a financial or a commercial credit note without GST. This will not reduce A's GST liability. This will also not require B, that is buyer, to reduce the proportionate input tax credit. Have you understood? This is the first amendment relating to financial or a commercial credit note. There is one more point. This mechanism of pre-supply discount credit note with GST is allowed to be worked only in case of B2B transaction. In B2C transaction, this is not allowed. Why? Because A already collected the amount from the ultimate customer, B, who cannot reduce the input tax credit. A collected that amount from B and paid to the government. So A cannot say afterwards that I want to reduce my GST liability. Otherwise, A will become unjustly enriched. GST is a destination-based tax, destination-based consumption tax. It is the incidence of tax is ultimately borne by the end consumer. In case of B2C transaction, it is already passed on to the customer. There is no question because buyer, the ultimate consumer, cannot reduce the input tax credit. So there is no question of reversal of GST liability of the supplier. Okay, have you understood this? Now let's see the next part. Relating to inducement. Do you remember that in case of there is a definition of consideration? What it says, the three things, three words are there. In relation to, in respect of, for the inducement of, and there is an amendment relating to inducement. So in case of inducement, the GST liability is payable not only on the amount collected from the customer, but also on the amount of inducement. What you understood? Nothing. So let's take one example. This is generally happening in case of electronic industries like mobile phone or other electronic equipments. Let's take an example that there is a manufacturer M. He sells goods to the dealer D. Okay. M wants D to sell that material to C customer at a lower price. Normal price is 10,000. M promises 2,000 rupees support to D if he is able to sold that material to C at rupees 8,000. So this is an inducement from manufacturer to the dealer. So in this case, a GST is payable not only on 8,000 collected from the customer, but also on the inducement amount of rupees 2,000. This is an important amendment. You may expect a question on this in your exam. Have you understood? The crux of this amendment is that GST is payable not only on the amount collected from the customer, in this example 8,000, but also on the inducement amount of rupees 2,000, which is receivable from M in this case, if D is able to sell that material to C at rupees 8,000. Okay, have you understood the amendment?